It's so interesting because it's one of the reasons why the Midwest is seeing rising rent prices and so much housing demand and just progress is how affordable it is.
It's
And the
room.
pri-
Yes,
and the
there's
prices
room
are
for it.
so low
Yep.
that you can just the overall cost of living is
Hmm.
low. So it's a good place to live.
Hmm.
Now, some of these other Sunbelt markets may be more desirable and seeing more demand, but they're so expensive. So it's not exactly an option for too many
Yeah.
people.
I've been thinking, and that's one of the other things I was thinking as we'll see it in this multifamily specific report was this idea of like a ceiling of affordability and like a floor of demand that we're running against. One of the things I noticed was we've covered this report in the past.
Yeah.
I think we covered it maybe in like 2020 or 2021. And one thing I noticed was their graph of the market cycle, this little wheel they have between the stages of recovery, expansion. No, that was there. It was
I
like,
thought that was the office. That's
oh, that is
off.
for office. Sorry, I'm getting screwed up here. But they have this wheel of the multifamily market cycle that moves from expansion to hyper supply to recover or to recession and then to recovery. Now, expansion is characterized by different levels of um, different levels of demand and supply, but they have all these markets along along this. I'm guessing it's like a life cycle or something.
Mhm.
I thought it was kind of interesting in the hyper supply category. We have a lot of these Midwestern markets that are
Mhm.
experiencing a lot of rent growth. And I haven't noticed that they're getting a lot of new supply in the
I mean,
future.
they are getting everyone's getting a decent amount of supply, more relative to the
Yeah.
past.
Yeah.
I mean, Indianapolis in the Midwest. I mean, the new deliveries relative to existing inventory is in the 5 to 7% range, depending
Okay.
on the market.
Hmm.
It's usually in like the 3 to 4% range. So it's definitely higher, but it's not like 9 or 10 or 12 like the Sun
Yeah.
Belt.
Yeah.
So I mean, there is definitely new supply coming online. It's just not nearly what it is like in some of the actual hyper supply markets
Hmm.
and the markets that have even gone past that.
That's interesting. Just for their definitions of like what hyper supply is and what this recession and recovery, they they define expansion as the decreasing vacancy rates, moderate to high new construction, also high absorption, high employment growth, and high rent growth. Hyper supply is increasing vacancy, high construction, low absorption, moderate to low employment growth, and medium to low rent rate growth. I think that, that's not what I'm necessarily seeing in places like Cincinnati or
I
Indianapolis
mean,
or
I
Kansas
would
City.
put even I don't think it's wrong. I mean,
Yeah.
I would say that it's on the moderate, like on the absorption. It's definitely low or negative. I mean, absorption in a
Yeah.
lot of
Yeah.
markets in the Midwest has been low or negative. The supply hasn't been as much, so we still have some rent growth.
Hmm.
The employment growth has been moderate. It's not been low, and the rental rate growth has been medium low. It's not been negative. And that's
Yeah.
where in the recession it says actual negative rent growth. Where I
Hmm.
think I honestly think there should be more markets in the recession
Yeah. Yeah.
category.
And it is worth mentioning that by far the biggest group of markets are grouped in the hyper supply section. But I wonder, I wonder how I'm not sure if this is going to move, if these markets are going to move linearly, if it's always moves in a like clockwise direction. It could go from hypersupply to expansion or from, recession to hypersupply or whatever, depending on what moves the apartment developers make and how population growth and job growth shakes out. There could be a little bit different shifts here. I'm not wholly convinced, especially considering they called out the Washington Boston corridor in the earlier commentary, and that's
What do they call them out for?
they called it out for low cost of living and
I wouldn't call that an area low cost of
well,
living.
yeah, I mean
I would not
inflation. What
call
did they?
I would not call the Boston low cost of living
Well,
or
they did
Washington
say,
D.C.
but they did say that inflation has been lower. It's maybe
Okay,
the ground, but
yeah. Well, inflation's been lower in San Francisco too. It's still
yeah,
expensive.
yeah,
It's all relative, Matt.
yeah.
It's all relative.
Kind of, but
That's what that chart misses. I think.
that's true. That's true. And they do talk about affordability issues too that are coming to favor Class B units.
Hey, you don't want to talk about the
Um,
cap rates?
oh yeah. Oh, let's see. You think that would they have
is
I don't think
accurate.
they have their projections, but they definitely have a prevailing cap rate for these markets. I would be interested to see what your
I
opinion is.
mean, I think that it's more or less maybe correct. I mean, based in the in the South, CBD Class A at a 5.35 cap. Sure, I think that could possibly be correct. You know, it's gone up 70 bips, 58 bips on the suburban Class A at a 5.5 cap. I mean, yeah, I mean, because these deals were trading for 4 caps, 3.5 caps a couple years ago.
Hmm.
Again, they don't even have like the Midwest, or I
The
guess central
yeah,
region, just the rest of the country besides the East Coast, the West Coast, and the
yeah.
South. Anyway, that's fine. Yeah, I mean, suburban Class B, 6.83. I mean, I think that's where things should be. I don't think that's exactly where things are, though.
What does the discount rate mean as opposed to the
I'm not
cap
sure how
rate?
they're using the discount rate.
So, yeah, it's what do they so the movement
I
here.
mean, it could be when they're like their MPV calculation, but
Okay.
uh,
So, I do think it's interesting, across the board, cap rates have gone up from 22 to 23. But the most that any of these cap rates have gone up is, what is it? Maybe like 83 basis points, which sounds like kind of a lot. But I'm positive that interest rates have gone up way more than
oh yeah, oh yeah.
from that period. So we are still in a situation where interest rates are high, cap rates are not as much as they've gone up. They have not gone up enough, and
Mhm.
I think that the market is keenly aware of that. And there was an article just last week that posed the question of like, are investors going to dip out of the multifamily investment market because interest rates and sluggish capital markets and high and low cap rates? It just doesn't make it really fun to invest right now.
Yeah.